What's up, guys? Welcome back to DCA. Today, what I want you to do is ask yourself, can you name what the top 10 altcoins were back in 2017 or early 2018, right before the market cycle came to an end? If this is your first market cycle and you haven't been researching prior market cycles, you may not be able to do this. And the reason I ask you to do this is because today we're going to talk about some of the risks associated with being overexposed to all altcoins or a vast majority of your portfolio being composed of altcoins if we were to head into a bear market. I'm not implying that we are heading into a bear market. All I'm implying is Bitcoin is below the 20-week moving average. You can see that historically, when Bitcoin goes below the 20-week moving average, so here we have the 20-week, when we go below, we went into a full out bear market. Here, when we went below, we had multiple months of downtrend for the market as a whole. That trend even continued essentially all the way through March of 2020. In May, when we went below the 20-week, we had 3 months of downtrend. And Bitcoin, while it goes down, the altcoins go down significantly more. So the point that I'm making right now is Bitcoin is below its 20-week moving average. And historically, this has indicated the market is in for at least several months of turbulence. Now, it's not to say it has to happen this way. I'm only pointing out historically, and you can even go back farther than 2017, historically, when it goes below its 20-week moving average, we're in for a bit of turbulence in the market, if not just a bear market, okay? So we don't know what's to come in 2022, but we do know at the moment we're below the 20-week, and we know historically what that indicates. So today, this is what we're going to do. We're going to take a historical snapshot of the top altcoins back in early 2018, right at the end of the bull market. And we're going to show what the associated risks of holding these altcoins through the bear market and into the most current bull market. And, right now we have things like Solana, Polkadot, Cardano, XRP, Avalanche, Terra, Polygon's up there. So there are a lot of projects that you think of as being quality projects. But let me tell you this, and I can assure you of this. Back in 2017, people thought that, if we just go back, people thought that these projects were the future. There were, I'm not saying everyone thought this, and you'll always have Monday morning quarterbacks, but back then, people thought that these were the future projects. And while many of these still are high market cap altcoins, many of them are not anymore. And so we're just going to look at this and kind of show, for new market participants who don't know the history, we're going to show what this history is and what sort of risks may be associated in the market today. Okay, guys, so the way we're going to do the analysis today is by using this indicator on the bottom. And if you just bear with me 5 seconds, it's actually really easy to explain. All this indicator does is asks, if you reach a new all-time high, you reach this level up at 100. So if you're at 100, that means you're at a new all-time high. And each time you're at a new all-time high, you are at the 100 level. Then from there, the graph simply states how far off of your prior all-time high you are. Okay, so you can see we made an all-time high right here. All along this way, in fact, we were making all-time highs. That's why we're riding right along 100. And then shortly thereafter, you can see we had this massive dip, all right, all the way down to here. And that dip, in fact, was 70% below the all-time high, all right? So all you do is 100 minus whatever the number is, and that's how far below you are the prior all-time high. So again, here we made all-time highs, and then we had this big dip here, and then we were right here, which is right at around 46%. So we were 54% below the prior all-time high. So it's a very simple indicator. By the way, big shout out to Cello. He's a member of the DCA community. I asked him to make me this indicator because I'm the world's worst coder, and he actually made it for me in about an hour. So big thanks to him. So, you can see basically as we come through 2017 into the bull run, we're making new all-time highs all the way. So, if we go right over, this is right here is when you start making a new all-time high. Then we keep making all-time highs, and then we head into the bear market. All right. So we're going to use this indicator to look at the altcoins and look at their prior all-time highs and compare them to where they're at now and what the risks associated of holding them throughout the bear market is. Okay. Okay, guys. So I've just added lines to the chart to show you levels from 0 up to 100. So remember, when we're at 100, which is this line right here, when we're at 100, that will indicate that we're at a new all-time high. When we're at 0, that would indicate that your asset has went to 0 and you have lost all your money. We're not going to be looking at any assets that have done that. All right. So we'll start with Bitcoin. And you can see that basically right here in about February, Bitcoin started making new all-time highs. If we just go over here, and you trace over, we start making new all-time highs right here in February. We got close in, January of 2017, but didn't quite get there. So February, start making new all-time highs. We continue to make new all-time highs basically all through the beginning of 2017. Notice though, there were corrections. Here's a 30% correction in March. Here's a 35% correction in July. Here's another 35% correction in September. And if you notice right now, well, we're sitting right at another 35 or around 30% correction. Okay. That's a side note though to what we're doing today. So we have these massive corrections all throughout the market cycle. Importantly though, remaining above the 20-week moving average. We continue to make new all-time highs in October, November, finally in December, and then the market just begins to crash. So Bitcoin drops about 65% in short order. Then the bear market continues. There's times when it goes slightly up, but in general, it continues down until we get to our worst point of the bear market when our close is approximately 83.5% below our prior all-time high. That's the risk of holding crypto during the bear market. The risk of holding crypto when Bitcoin is below its 20-week moving average in general are these massive drops. You can see Bitcoin eventually though recovers and starts making new all-time highs. Now, more recently in October, we made an all-time high. And finally on November 8th, we hit around $69,000. But importantly, since that time, we're back down about 30% at the moment. This chart perfectly shows you what the risk of holding crypto is. If you're holding crypto, even Bitcoin, which is thought of as the most stable asset, and even if we go back from its prior all-time highs, has historically been down 80 to 85% in full-fledged bear markets. People flee the market. Now, one of the primary tenets of this channel, and if you've watched any of our videos, you know, when Bitcoin is below its 20-week moving average, it begins to lose value, but the altcoins lose significantly more value. And we're going to look at that today, but we're going to look at a much more important example here. And that's when we have altcoins as our primary value in our portfolio going into a bear market. And if you've ever watched a video I make, I think this may be the most important lesson that you can learn as a new market participant in the cryptocurrency asset space. Okay. So let's go now and then look at some of the altcoins back in 2018 coming into this market cycle. Okay, guys. So the first thing we're going to do is take a look at XEM. This is the native token of New Economy Movement. All right. So that's what NEM is. That's like saying ADA is the native token of the Cardano network. All right. And the first thing I want you to do is notice it's $16 billion market cap. Let's just come today and see where that would put us. So $16 billion would put us between Shiba Inu and Polygon. Or if we forget about Shiba Inu, it would put us between Terra Luna and Polygon Matic. All right. So let's take a look at the chart now. Okay, guys. So this is XEM. All right. And what we see here is, XEM made all-time highs back in 2016. It was making all-time highs. Then it had a massive retraction coming down, right at the end of 2016. It came down about 75%, but then started making all-time highs through the bull run. And this is what we see a lot of altcoins do now. They'll make an all-time high at some point, then they'll have a massive correction. They come way down, and then they recover and start making all-time highs again as the bull market proceeds. And then remember, Bitcoin goes below its 20-week moving average right at the beginning of February. Bitcoin starts showing weakness throughout January, and as you would expect, you see your altcoins plummeting. So here's XEM. And right at around, so if we just zoom in here to see January 6th, it starts falling in price. So going from a high where we got, if we just take the highest close, it's probably right here, and we closed at about $1.80. Then it just starts plummeting, okay? All through January, all through February, all through the bear market, XEM is down, and we come all the way down. When you have to zoom in to see how far down you've gone, something's wrong. So we come all the way down to about a 98% loss from where you were, okay? From your highest close. And now this is the whole point of the discussion today. Let's take a look at what holding this altcoin, which was a top 10 altcoin, a $16 billion market cap, nearly putting it in the top 10 in this market cycle. It would get you right now, you are down about 93% from your prior all-time high. Okay. Even at its best, this market cycle, the highest it ever got to was 44% of its prior all-time high. Okay, so now let's look at TRON. TRON was $13 billion market cap at the time. All right. So TRON was at about 20 cents with a $13 billion market cap back in 2018. Let's see where TRON is now. Okay, so this is TRON US dollar. And you can see a very similar picture, guys. We see a massive spike up to a $13 billion market cap. So, we get up to approximately 20 cents at our highest close. So TRON then goes down during the bear market about 96.5%. TRON, on the other hand, so if you were buying maybe through here or even possibly into here, TRON, on the other hand, has actually, it still has not even gotten close to its prior all-time high. 73%, I don't know, maybe you would consider that close. But that was just for a very short amount of time. And in fact, we've been living right in this about 40% of our prior all-time high valuation. Now, if you look at if we just bring this down, TRON has actually done somewhat better than some of these other coins have. In fact, you could basically say that ever since about March of this year, we've been living above at least some of these levels that we were at prior to just this very short-term peak. Okay, so let's keep going. Let's take a look at the number 4 at the time, Bitcoin Cash, $47 billion market cap. Let's see where that would put us today. $47 billion market cap would put us between Solana and USDC, ahead of Cardano. Okay, so let's look and see where Bitcoin Cash is now if you were to hold it through the market cycle. Okay, so what we're looking at here is Bitcoin Cash. And again, Bitcoin Cash making all-time highs basically through 2017. It peaks, it sets its last all-time high right here in December of 2017. From there, it crashes along with Bitcoin, along with the rest of the market, going down as much as right here, we were about 98% below our prior all-time high. And this market cycle, you at best for only a few days, you got back to 42% of your prior all-time high valuation and are currently sitting at about 88% below where you were at during your all-time highs from here. Okay, guys, so this is actually one of the last ones I'm going to do because this is kind of beating it into the ground. You know, the trend is the same, but I wanted to show you an example. So this is XLM, and XLM actually has some, you know, has formed some corporate partnerships and things like this. It actually has, you know, what could be considered a valid use case. And even XLM making a peak back in 2018 was down about 96.5% and only recovered about 80% of its prior all-time high. And since then has essentially spent the majority of the time below this. All right. And is now sitting, if we look from right now, we're at about 72% below our prior all-time high. So the whole point of this is that you may believe in whatever altcoin you have right now, Solana, Cardano, Polkadot, you know, the list goes on and on, Matic, Chainlink, etc., 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 Avalanche, Luna. You may believe in those projects. Several of them I am heavily invested in and am a believer in, but it doesn't change the fact that you don't know what the future holds. You don't know what future technologies will come out, what future projects will come out to fulfill real world use cases that may not even have been thought of yet. So for instance, you don't know if NFTs are going to continue to be in demand in the next market cycle. You don't know what forms of the blockchain are going to gain mass adoption. We don't know yet. It's a nascent market. It simply means that at this point, it's all speculation. So the thing I'm trying to stress to you is if you're buying altcoins, especially if you're buying altcoins near the top, this can lead you to absolutely devastating losses in the long run if the market continues to trend down. Now, just to reiterate, if we just look back to May, look at the type of losses that some of these older altcoins took even from May. We went from about 72% with, or 72 cents with XLM and went all the way down to about 20 cents. The whole point here is you don't know that just because a coin that you have is making an all-time high in this market cycle and is thought of as being top of the class in this market cycle, it could be replaced by 5 other things in the next market cycle. I mean, think about it this way. Would you rather have Solana or would you rather have XEM? And I think the vast majority of people, you know, through the lens of the 2021 market investor, would say Solana, for instance. I'm not knocking XEM. I'm simply saying new technology has come out, new use cases have presented themselves, and that is how the market is decided at the time, based on what is in demand at that moment in time, and we simply don't know what that will be. The only thing we do know, at least historically, is that there's been a demand for Bitcoin and a demand for Ethereum stretching over market cycles. There's value being created, at least by the Ethereum network, and there's value being stored in the Bitcoin network. So in terms of investing in times of uncertainty, like we're at right now, it's likely best to have at least core positions in more stable assets like Bitcoin and Ethereum, which, you know, at the end of the day, those are going to get hammered too. Let's just, you know, we'll just quickly do this. We'll pull up Bitcoin and Ethereum, and you can see that even, you know, here's Bitcoin in blue. Even Bitcoin gets hammered during the bear market. Okay, even Bitcoin and even Ethereum get hammered during the bear market. In fact, Ethereum was worse off during points during the bear market than XLM was. But the fact remains, Ethereum and Bitcoin both come back sooner and both made all-time highs throughout the market cycle. So that's my only point, guys. It's just another, on this channel, we do educational content. My entire goal on YouTube is to help people at least, you know, some of this is my opinion. It's very difficult to, not have an opinion. We're looking at all of this information through the lens of data. And when you do that, certainly, you can skew data, you can, present things how you want to present it. But at the end of the day, I try to be as objective as possible and simply educate new market investors or even long-term market investors and illustrate points that they may not have thought of or show them things about the market, characteristics of the market that they may not have considered before in order to make more informed decisions going forward. So, with that said, guys, just keep this in mind. If you're heavily invested in altcoins, it can be a massively risky proposition. The market can always turn around and recover, but if it doesn't, it's very likely that many of your favorite altcoins may never recover to the points where they're at right now. So, with that said, guys, if you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.